Good morning, everyone. Our topic is all about investing your financial resources, and it has four subtopics: investing in stocks, investing in bonds, investing in mutual funds, and investing in real estate and other investment alternatives.
First, we have the investing in stock. Narito ang mga ating objectives. First is identify the most important features of common and preferred stocks. Second, explain how you can evaluate stock investment. Third, analyze the numerical measures that cause a stock to increase or decrease in value. Fourth, describe how stocks are bought and sold. And the last, explain the trading techniques used by long-term investors and short-term speculator. So ano nga ba ang ibig sabihin ng stocks? Stocks is also known as equity, is a security that represents the ownership of a fraction of the issuing corporation. And the stocks are issued by sole proprietors, partnerships, and corporations. Narito naman ang dalawang uri ng stocks. Meron tayong common stocks and preferred stocks. First is the common stocks. Ito naman ang may kapangyarihan ang para bumoto ang board members na mga siwa ng mga kanilang decisions. And ang preferred stocks naman ay may preference na binibigay pagdating sa claim earnings at asset nito. At ito ang preferred shares. Samantalang ang common stocks ay ang may last claim sa mga ito. And ang advantage ng preference or shares sa common ay kung umabot man sa liquidation or pagsasara ng corporation, una mo nang binabayaran ang preferred stocks bago ang mga common stocks. Why corporations issue common stocks? Common stock is the most basic form of ownership for a corporation. Corporations issue common stock to finance their business, startup costs, and help pay for expansions and their ongoing business activities. Corporate managers prefer selling common stocks as a method of financing for several reasons. A form of equity. Ang form of equity, ito naman yung mga proseso para tumaas yung income at tumaas din yung mga funds by selling the ownership is referred to as equity financing. Hence, not mandatory. Ito naman ay when a company issues additional shares to common shareholders without receiving any compensation. Is voting rights and controls of the company. Voting rights means the shareholders can approve the major decisions. Ito tulad ng mga appointments to the board and executive compensation and other investor concerns. Why investors purchase a common stocks? Today, a lot of people buy and sell stocks. Why? The most obvious answer is simple. They want larger returns than those that more conservative investment offer. Dahil gusto nilang lumago or mas malaki ang balik ng kanilang invest para sa buy and sell. Isang halimbawa ay ang tulad ng pagbabay and sell ko ng isang sasakyan. Bibili ako ng isang sasakyan kahit na ito mga second hand lang. Tapos kapag tumaas na yung mga presyo, maaari ko tong ibenta ng mas malaki doon sa pagbili ko para sa ganun makita yung investment. So ito yung common na dahilan kung bakit nagba-buy and sells ang mga tao. Next is income from dividends. Ang income from dividends naman, if a corporation is not profitable, it is unlikely that the stockholders will continue to receive income from dividends. Ito ang tinatawag na income from dividends. Next is the dollar appreciation of stock value. In most cases, you purchase a stock and then hold on to the stock for a period of time. The market value of the stock increases, you must decide whether to sell the stock at the higher price or continue to hold it. If you decide to sell the stock, the dollar amount of difference between the purchase price and selling price represents your profit. What happens when a corporation splits its stock? A stock split is a procedure in which the shares of stock owned by existing stockholders are divided into a larger number of shares. Why do corporations split their stock? In many cases, a firm's management has a theoretical ideal price range for the firm's stock. If the market value of the stock rise above the ideal range, a stock split brings the market value back in the line. Ano nga ba ang split stock? Ang split stock, ito yung when a company makes its shares more affordable by dividing its existing shares into a larger number of less expensive ones. An split may reduce the price per share but it does not affect the company's market capitalization. Ang preferred stocks, meron itong advantage kaysa sa common shares. Ang advantage ng preferred stocks or preferred shares sa common shares ay kung umaabot man sa liquidation or pagsasara ng corporation, ito yung unang binabayaran yung mga preferred stocks bago ang mga naka-common shared. Preferred stocks are often referred to as middle investment because they represent an investment midway between common stock and ownership position for the stockholders, and corporate bonds as stock are often referred to as for the bondholder. When compared to corporate bonds, the yield on preferred stock is often smaller than yield on bonds.
And I will be reporting evaluating a stock issue. Many investors expect to earn a 10% or higher return on their investments. Yet, they are unwilling to spend the time required to become a good investor. They wouldn't buy a car without a test drive, but for some unknown reason, they invest without doing their homework. The truth is that there is no substitute for a few hours of detective work when choosing an investment. A wealth of information is available to stock investors, and a logical place to start the evaluation process for stock is with the classification of different types of stock investments. Classification of stock investment. So there are 10 different categories or types of stock here. Number 1 is blue chip, a safe investment that generally attracts conservative investors. Number 2, cyclical, a stock that follows the business cycle of advances and declines in the economy. Number 3, defensive, a stock that remains stable during declines in the economy. Number 4, growth, a stock issued by a corporation that has the potential of earnings profits above the average profits of all firms in the economy. Number 5, income, an investment that pays higher than average dividends. Number 6, large cap, a stock issued by a corporation that has a large capitalization in excess of $10 billion. Number 7, mid cap, a stock issued by a corporation that has capitalization of between $2 billion and $10 billion. Small cap, a stock issued by a company that has a capitalization of between $300 million and $2 billion. Microcap, a stock issued by a company that has a capitalization of $300 million or less. And lastly is penny stock. A penny stock is often defined as a stock that sells for $1 or less per share, or in some cases less than $5 per share. So let's proceed to the next topic in investing in stocks, which is numerical measures that influence investment decisions. Evaluating a stock issue. Many investors rely on numerical measures and different calculations to decide if it is the right time to invest in a stock. These same calculations can also help investors decide if it is time to sell a stock. So, why corporate earnings are important? Many analysts believe that a corporation's ability or inability to generate earnings in the future is one of the most significant factors that account for an increase or decrease in the price of a stock. Simply put, higher earnings generally equate to higher stock prices. Unfortunately, the reverse is also true. If a corporation's earnings decline, generally the stock's price will also decline. So there are examples here in earnings per share. which will be computed as earnings per share is equal to after-tax income over number of shares outstanding. And next is price earnings ratio, which means it is a price of a share of a stock divided by the corporation's earnings per share of stock, which will be computed as price earnings ratio is equal to price per share over earnings per share, or divided by earnings per share. And here are the examples of other factors that influence the price of a stock, which are dividend payout, dividend yield, total return, annualized holding period yield, beta calculation, Procter and Gamble, beta calculation, Texas Industries, book value, and market to book ratio. In this topic of investment in stocks, there are also investment theories here, which are fundamental analysis, technical analysis, and efficient market hypothesis, or EMA.
When it comes to investing, how do bonds fit in the big picture? Bonds are often considered a safer investment when compared to stocks or mutual funds. In fact, bonds are considered a safe harbor in troubled economic times. In addition to asset allocation and diversification, investors often choose bonds because they need current income provided by bond interest payment, and they expect to be repaid when the bonds mature. Some investors even choose specific bonds because the bond's maturity date coincides with their expected future expenses. Next is the characteristics of corporate bonds. First is the corporate bonds. It is a corporation written pledge to repay a specified amount of money with interest. A bond is a debt obligation like a loan. Investors who buy corporate bonds are lending money to the company issuing the bond. In return, the company makes a legal commitment to pay interest on the principal and in most cases to return the principal when the bond comes due or matures. And also, it is helpful to compare them with stocks. When you buy a share of common stock, you own equity in the company and will receive any dividends declared and paid by the company. When you buy a corporate bond, you do not own equity in the company. You will receive only the interest and principal on the bond, no matter how profitable the company becomes or how high its stock price climbs. Face value is the price at which this bond will be issued. Maturity date of a corporate bond is the date on which the corporation is to repay the borrowed money. And also the maturity date of a corporate bond is the date or which expires and all invested amounts will be refunded to the bondholders. Sa maturity date of our corporate bond, ang short term ay under siya ng 5 years and the intermediate term ay 5 to 15 years at ang long term naman ay over 15 years. Ang bond indenture naman ay legal contract, the document between the bond issuer at ang bondholders. And the bond indenture includes many clauses. In addition, the bond indenture, also known as a bond resolution, is a core legal document that acts as a contract between the bond issuer and bondholder and contains all the details related to the bond, like details of the issue, purpose of issue, obligations of the issuer of bond, and rights of the bondholders. Last is the trustee. It is a financially independent firm that acts as the bondholder's representative. Usually, the trustee is a commercial bank or some other financial institution.
Our next topic is all about investing in bonds. Bonds are investment securities where investor lends money to a company or a government. Dito, bonds is a loan. Pautang ito ng mga investor sa isang borrower tulad ng mga company or government in a set period of time. When it comes to investing, how do bonds fit in the big picture? Itong bonds is ginagamit ng mga government or companies para mag-raise or tumaas yung money sa pamamagitan ng paghiram nila ng pera sa mga investors, and then yung mga bond issuer or yung mga borrower, magpa-promise sila to pay back the investment ng may interest over a set period of time. Characteristics of corporate bond. Corporate bonds is a bond issued by a corporation. Investors who buy corporate bonds are lending money to the company issuing the bond. Dito, in return, yung company is gumagawa sila ng mga legal commitment na magbayad ng interest on the principal. Face value is equal to the dollar amount the issuer pays to the investor at maturity. Face value, ito yung dollar amount na matatanggap ng mga bondholder kapag yung investment is fully matured na. May example dito kung paano kukunin ang interest. Assume we purchase a $1,000 corporate bond issued by Xerox Corporation that matures on May 15, 2018. The interest rate for this bond is 6.350%. Using the following formula, you can calculate the annual interest amount for this Xerox corporate bond. Dollar amount of annual interest is equal to face value times interest rate. Ang usual face value kasi na amount is $1,000. So, 1,000 times interest rate na 6.350. Yung 1,000, ito times mo lang siya sa interest rate. Kunin mo lang yung decimal point ng 6.350. So, 1,000 times 0.635 is $63.50. So, in this situation, you receive interest of $63.50 a year from Xerox. Next is maturity date. Doon sa example kanina, the maturity date for the Xerox bond is May 15, 2018. So, ang maturity date is ito yung mga nag-agreean na date or fixed date na napag-usapan. Bond indenture is a legal document. So, bond indenture, actual legal conditions for a corporate. Ito yung mga contract or kontrata associated with the bond. Nilalaman nito is yung mga bond features, yung mga actions that will be triggered if yung issuer ng bonds is nag-fail sa pagbabayad. A corporation issuing bonds appoints a trustee. So, ang trustee, hina-hired or ina-appoint ito ng mga bond issuer. Sila yung mga nagko-collect ng funds upang bayaran yung mga scheduled interest and principal sa bond. So, sila yung mga napagkakatiwalaan ng mga bond issuer. Why corporations sell corporate bonds? Some basics of why corporations sell bonds. Corporation borrow when they 1. Don't have enough money to pay for major purchases. 2. Need to finance a corporation's ongoing business activities. 3. Find it is difficult or impossible to sell stock. 1. To improve a corporation's financial leverages. The use of borrowed funds to increase the firm's return on investment. Use the interest paid to bond owners as a tax-deductible expenses that reduces the taxes the corporation pays to federal and state governments. Corporate bonds are often referred to as a workforce. So, itong corporate bond is ginagamit ng maraming corporation para tumaas yung capital nila because it costs less to issue bonds kaysa sa magtinda ng mga new stock issue. These are the types of bonds. Number 1, debenture. Debenture is a form of unsecured debt. So, yung mga corporation and governments entities ay nag-i-issue sila ng debenture para tumaas yung capital at funds nila. Example ng debenture is treasury bond and treasury bill. Yung issuer or borrower is magbabayad base sa nag-agreean na interest or magbabayad sila ng buo sa maturity date or sa fixed installment payable nila. Kapag naman yung corporation or government is nag-fail sa pagbabayad ng interest at hindi nakabayad sa maturity date, yung government or company is pwede nilang kunin yung mga resources nila from taxes, tas yun yung pagbabayad nila. Next is mortgage bond. Kung ang debenture is unsecured bond, ang mortgage bond naman is secured bond. Mas safe ito kaysa sa debenture. Example ng mortgage bond is real estate. Kapag ang homeowner hindi nakabayad sa maturity date or nagkaroon ng default sa mortgage, yung bondholders is i-convert niya into cash yung mga assets or property ng homeowner. So, yung mga properties nila is maliliquidated. Yung bondholder or yung may-ari ng bond is may karapatan na kunin or itinda yung mga property or assets ng borrower if hindi nakabayad sa maturity date or sa nag-agreean nilang date na pagbabayad. Number 3 is subordinate debenture. Kapag yung company is na bankrupt, i-assign ng bankruptcy court na babayaran yung utang ng company according sa mga priority na babayaran. And i-require nila yung mga existing debt ng company is babayaran according sa mga available assets ng company. Number 4 is convertible bond. A special type of bond can be exchanged. So, nag-offer yung mga corporation sa mga investor ng option na i-convert ba into cash yung convertible bonds nila o gawin na lang na stock share ito sa company. Last is high yield bonds. Though may more interest but greater risk, they can provide a higher yields than investment bonds but they are also riskier investments. So, dito pag yung corporation is nag-issue ng high yield bonds, may tendency or maaari hindi sila makabayad ng interest each year. Sa high yield bonds kasi is may greater risk na yung nag-issue is magkakaroon ng default sa mga utang lalo na sa pagbabayad ng interest.
Provision for prepayment. Call feature. Call feature bonds that can be redeemed or paid off by the issuer prior to the bond's maturity date. Sinking fund. The sinking fund helps reduce the impact of these high costs. Serial bonds is less interest will be paid over the life of the bonds. Types of bonds. Registered bond. For registered bonds are mailed directly to the bondholder of record. Registered coupon bond. Can collect the principal of maturity interest payment can be made to anyone. Bearer bond, which don't record the owner's info, are the opposite of registered bonds. Zero coupon bond is a debt security that does not pay interest but instead trade at a deep discount. Bond repayment. A bond term to maturity is the period during which issuer will receive interest repayment on the investment. Bond ladder is a portfolio of fixed income securities in which each security has a significantly different maturity date. The mechanics of bond transaction. Investor buy debt securities that are brought to the marketing by either governmental or corporation. Government bonds and debt securities. In this section, we discuss bonds issued by these three levels of government and look at why investors purchase these bonds. Treasury bills is free to register in direct website and it will function like brokerage account that hold your bonds. Treasury note. It is a debt obligation that comes with maturity of 10 years. Treasury bonds. Higher interest rate is like of the time investor must hold treasury bonds. Treasury inflation protected securities. The adjusted principal or original principal, whichever is greater. Federal agencies. Debt issues are considered safe investment by most financial planners. Use the internet to evaluate a stock investment. You can use the internet in three other ways. First, specific bond issues to track the value of your investment. Websites are not as numerous as websites that provide information on stock. The following website is www.shopforbonds.com, www.bondsonline.com, and www.investinginbonds.com, etc.
Fund, a managed fund that pools money from shareholders to invest in securities. Closed-ended funds have fixed investment periods or maturity periods during which the investors cannot redeem units. Post-maturity, the closing unit value is automatically redeemed and transferred to the unit holder's bank account. In exchange-traded funds have pros and cons. Pros: lower cost, diversification and risk management, tax benefit, easy to trade. Cons: potentially higher cost, limited control, tracking. Open-ended funds can be bought or sold at any time after the launch of the new found offer, or NFO. In the net asset value, if an investment company has securities and other assets worth 100 million and has liabilities of 10 million, the investment company's net asset value will be 90 million. In the load fund, if you invest 1,000 into a 5% load mutual fund, you would actually be investing only 950, with the remaining 50 going to the company as a commission. In the no load fund, example is if an investor purchases 10,000 worth of a no load mutual fund, all 10,000 will be invested into the fund. In the expense ratio, you invest Rs 10,000 in a fund with an expense ratio of 1.5%, then you are paying the fund Rs 150 a year to manage your money.
Family of funds, so these are the examples. First is ensuring the continuity of the family business. Second, flexibility in real classifying income and distributions to individual needs. Last, providing easier access to liquidity and leverage. So, income divided. Examples is suppose an investor buys $10,000 worth of a stock with a divided yield of 4% at a rate of a $100 share price. This investor owns 100 shares that all pay a dividend of $4 per share. So 10 times $4 is equivalent to $400. Next is capital gain distribution. So example, Maria owns 100 share of XYZ Mutual Fund. Then the price at $40 per share on November 29. So for the total value of $4,000. So that's the example of the gain distribution. So next is the turnover ratio. So example, turnover ratio days in financial modeling, you can calculate the inventory turnover ratio by dividing the inventory days ratio by 365. So and fluffing the ratio in this example, inventory turnover ratio equals 1/73 to 365 is equal to 5. So this means that companies can sell and replace its stock of goods in 5 years a year.
Next is investing in real estate and other investment alternatives. So real estate investment involves purchasing, managing, rental, or sales for a profit. Example of these are land, infrastructures, or any permanent structures. So there are two classifications of real estate investment, direct investment and indirect investment. Dito sa direct investment, your name is on the investment contract. You have the right to control the investment or property as you wish. You can sell or buy it. Sa direct investment naman, someone is in control of your investment. It is a form of investment through a financial institutions like mutual funds or limited partnership. So these are the example of real estate investment: your home, your vacation home, commercial property, or any land and buildings that produces rental income. Example of these are apartments or boarding houses. Undeveloped land naman, ito yung mga raw land or vacant land na walang mga utilities, walang driveways and buildings. There is an endless list of possibilities for its use, like recreational use, raising livestock, or growing crops. Last is investing in foreclosures. These property are usually cheaper but has the potential for improvement or redevelopment. Types of direct real estate investment naman are limited partnership or yung mga business entity formed by two or more individuals comprising one or more limited partners, or yung mga functions like investors lang and at least one general partner that runs the business. So real estate investment trust naman, it allows individual to invest in large-scale company which owns and operate or finances income-generating real estates. Example of these are shopping malls. Investing in first and second mortgage. Yung first mortgage is yung borrower, maglo-loan siya para makabili or makapagpatayo ng isang property. Yung second mortgage naman is niyo-utilize yung property as a collateral para makapag-loan siya or maka-take out ng pera. So, yung first mortgage, lower yung risk niya, lower rin yung return. Kasi kapag naibenta na yung property, gamit yung nilon na pera, you can secure your money back. While sa second mortgage naman, higher yung risk and return niya kasi yung collateral may cost a lot more than the loan taken out by the mortgagee, meaning bigger yung return ng investment. Last is participation certificates. It allows investors to participate in share of a leased financing agreement. Dito naman, yung leased financing agreement is ginagamit ng municipality or government agencies para maka-acquire ng real property. Yung local governments makes regular payment over the annually renewable contracts for the acquisitions and the use of the property. So, yung lease financing contract ay yun yung tinatawag na certificate of participation. Next is investing in precious metals, gems, and collectibles. So, gold is the most popular investment among of all precious metals. So, these are the types of golds: gold bullion coins, gold stocks, gold certificates. So, it is said na yung mga precious stones like palladium and rhodium is like a gold, it is hedged against inflation. Sinabi ito kasi it tends to hold its value for longer period than many other types of assets. It is also will not depreciate and will hold its purchasing power for a long period of time. Last is collectibles like rare coins, work of arts, or yung mga paintings, antiques, stamps, rare books, or sports memorabilia. It is said that virtual collecting has its drawbacks or disadvantage. Buyers can examine objects for flaws or trademarks. Security risk of buying online when you don't know who's getting your cash or credit card number. Last, collectors is being victimized by forgeries or counterfeits. Ito yung mga imitations or mga look-alike na mga products or any collectibles that is on the net.
So let's start about the possible advantages of real estate investment. Number one is hedge against inflation. Malayo sa risk kapag may inflation. Kasi, yung ibang assets or investment is bumababa yung value pero yung gold hindi. Sa ibang bansa, the more na mas marami yung gold reserve, the more na mas mababa yung inflation rate. Number two is limited financial liability. Sa limited financial liability, meron tayong LLC or limited liability company. Kapag nag-create ka ng LLC para sa real estate business investment, ay isa sa mga paraan ng mga investors na bawasan ang personal na pananagutan if ever naharapin nila ang isang demanda or makaipon ng utang on behalf of the business. So, number 3 is no management headaches. So, kapag real estate, wala kang masyadong iniisip, hindi tulad sa ibang mga investment or business na maraming inventory. Number 4 is financial leverage. When you borrow money to make an investment that will hopefully lead to greater returns. So, mga idea lang dito is spending money to make money. Let's move on to disadvantages. Number 1 is illiquidity. Sa investment world, illiquidity refers sa mga assets natin na hindi basta-basta may ipapalit sa cash. One reason why is hindi sapat yung mga investors na willing bumili. And number 2, lack of diversification. Meaning, limited lang yung investment mo sa small size of real estate projects. Number 3 is no tax shelters. Tax shelters are legal way to reduce tax liabilities.
So, hindi niya ma-reduce yung mga tax liability sa legal na paraan. And lastly, new tax law provisions. Disadvantage kasi kapag may new tax provision, tumataas ang tax na binabayaran. Kapag tumataas yung tax rate, ibig sabihin mas malaki yung babayaran na capital gains tax kung nabenta yung property.
So that would be all. Thank you.